Good afternoon, good morning, everybody. My name is Joost Heins, and welcome to the Talent Market 30. In less than 30 minutes, I'm going to give you an update on what has happened in the last 60 days in the labor markets across the world. Today, we'll have a lot of topics, mostly centered around AI, but also, of course, a little bit of a feel on what's happening in the labor markets and the tension between employers and employees. And also what the impact is of the tariffs. We're going to have different lenses on AI. We're going to showcase the first case of job displacement because of a generative AI. We're also going to go into a leaked memo from Shopify that shows the tech giants' approach to AI. And also into what Microsoft has launched in finding skills through AI. Last but not least, we're going to go into the candidates using AI in the recruitment process. If you have any questions, please drop them in the chat box. There will be enough time for that to answer them at the end of this session. And I hope to hear from you, because I always really much enjoy the interaction through the questions. So let's get started. Let's first zoom in on some of the labor markets. Across the board, there has been a little bit of pressure on the job creations or the new jobs being formed. I'll go a little bit further into the tariffs in a minute. But if I look at what we see in the US happening, in general, we see that unemployment is slightly up to 4.2%. Obviously, that's still not very high for such a mature labor market, but still trending up a little bit. Also, the number of job seekers per open job is now at parity. Not long ago, that was almost 2 to 1. So you see, really, that has come down quite a bit in just a couple of years. The real wages are still up, so that's still a sign that is still growing. Of course, the tendency of inflation to go up again because of the tariffs is there, so we need to see how long that's going to last. But other areas did go a little bit into the more negative territory for the U.S. labor market. The number of the open rate was down. The number of job ads are slowing down. So all in all, the US labor market is slowing down a little bit. For the UK, a little bit more stable, but also a slight turn down. Unemployment up, open rates stable, and job ads a little bit down. For the Netherlands, it was a more stable view. Job ads were actually up a little bit compared to a year ago. You see that unemployment also up a little bit, and the ratio of job seekers per job open is actually growing again. So there's a little bit more stable view, but the other labor markets saw a slightly more negative trend. And of course, a lot of that has to do with the new president in the US announcing new tariffs and the shock that sent across economic markets and the impact that has on the labor market. And I thought that would be a good start as well for today to dive a little bit deeper into it. What I wanted to highlight is a research from Apollo Global Management. That's an asset manager. They have about 500 billion in assets under management, so quite a large player. And they have an economic research team that recently published a report that I thought was a very interesting sum up of everything that is happening in the world right now and how the business world is responding to tariffs. And their take, which I thought was interesting because it sounds very simple, but their take was basically in April, the 2nd of April, Trump announced Liberation Day, i.e. A lot of tariffs for a lot of different countries across the globe. Of course, he has pulled back on that, but we see that the tariffs in China are more than 140%. So the impact on trade with China is definitely there. And their take was, well, that has happened. It takes about 6 weeks for container ships then actually to slow down. So you will probably around early mid-May, that's when you see the number of products actually reaching the US going down. Then it takes 1 to 2 weeks for the trucks actually not to deliver the goods anymore to the shelves, and then actually the storage running out, meaning that you probably see some empty shelves in June, which then potentially leads to a summer recession. And that take they have combined with about 40 different graphs, and I have one here about the change in expectations of the earnings per share for Fortune or for S&P 500 companies, and you see that that has taken quite a big hit. Not as bad as before, but you see that compared to the last 5 years, we haven't seen this kind of hit anymore. And if you go through the whole report that they have published, you see a lot of things that are turning negative. First of all, a collapse in new orders and capex plans. I really wanted to highlight that because that has a significant impact on labor markets globally. Because of course, if you new orders, that means less sales, delaying capital expenditures, investments, or at least pushing that out, just means to less hires for any company. So there's a clear sign, if that is already happening, that will lead to a looser labor market in probably 3 to 6 months from now. Of course, if you combine that with the confidence plummeting in income groups, but also CEOs that have seen their confidence plummet, you see that the business conditions are deteriorating, and that the business environment is going to be much more challenging. We do see that stock markets are climbing up again, because there is hope that there will be trade deals being made. But of course, this kind of uncertainty for businesses is difficult to navigate. And when there is uncertainty, there's often a delay in making a choice, delay in making investments, and that will impact labor markets. So I think that's an important one to keep in mind over the next few months, that we'll probably see potentially a recession. You see that if you look at the betting markets, the chances of a recession being around 70%, especially when the numbers came in that the first quarter in the US, there was already a decline in growth. We could really see quite quickly a recession. And what's also interesting about this report is that they call it a voluntary trade reset recession. And I think it's interesting that Trump is willing to go that far to reset the trade, that it will actually affect the economy. So I think that will be the tightrope that he will need to walk, and see if he can manage to do the trade reset that he desires without tanking the economy in the meantime. We see that whenever the stock market responds bad, that does affect and how he's going to position himself. So that will be interesting to watch over the next few months. Then I wanted to move on to AI, and this is a topic that I think everybody has been talking about for the last 2 years, and especially when in November 22, 2.5 years ago, ChatGPT was released, and people immediately felt, hey, this could severely impact jobs. It actually took quite a long time before that came to fruition. We do think that we now have the first case where we can really see that AI is slowing down demand for certain skills. And the one that I'm showing here on the left is an indexed demand for the US overall compared to the demand in the US for customer service roles. And what you see there is that the overall demand for the US is a little bit less than 5% down year on year. But in the last few months, you can really see the decline in demand for customer service roles. And I think this is a real example of that AI is now actually reaching maturity where it starts to impact companies on how they deal with it. They're either launching these products or having it already in place, or probably anticipate doing that soon, and then are not hiring people now at the scale that they used to do. Just to give you a little bit of a feeling, there used to be about 20,000 job ads in the US every month, and that is now down to around 11, 12,000 a month. So that's a significant decline. We're going to monitor this trend, of course, over the next few months to see is this continuing. But for me, I think this is an obvious place where we would see the first impact. So that's why we also singled this one out. There are other areas that we're definitely monitoring where we see maybe less of a correlation, but do expect to see them pretty soon. You can think of any content or translator jobs in general that they don't have the same volume. So it's harder to track month by month and really make that correlation to say, hey, this is probably down significantly compared to the overall market. But of course, there you will have an impact as well. And the other area is going to be software development. One thing that we're closing in on is especially companies that are the early adopters of AI. Think about, for example, the Magnificent Seven, the seven largest tech companies in the world, and what kind of skills they are hiring. And what we see there is that there are definitely some months where they have hired a lot less junior software developers. So think about people with 0 to 2 years work experience. And now in the last month, we also see a decline of senior software developers for these companies. So that's an area that we'll continue to monitor, because that could be a sign that software development is also one of those areas where we'll see a reduction in demand because of the introduction of AI tools, making it easier to do that kind of work, and therefore reducing the need for people to be hired in that area. I think it also, for me, a clear call to action that if you're not doing it already, as HR or recruitment team in the business, you need to have plans in place to handle this kind of challenges in the market. How are you going to bring in talent that you're going to hire and might have to replace at some point? What are you going to do with the talent that is on that road? Are you aware of what parts of your population might be affected? All those areas, I think this is the right moment to make sure that you have those plans in place, because it takes a while before you actually get to execute and do something meaningful in those areas. And we see that the reality is now here that jobs are potentially being displaced. Staying with the AI topic, which features heavily today. Also, what I found very interesting is that Toby Lutke is the CEO of Shopify. For those that don't know it, Shopify is basically supporting a lot of e-commerce companies. If you want to start your own e-commerce companies, you can use the Shopify platform very quickly to start your own e-commerce company. And this is a very large company. It has a 200 billion value on the stock market. A very successful company. And their CEO had an internal memo that was leaked, and then he shared it himself about their new expectations around AI. So they are mandating the use in their whole organization. And I think that's a true shift, right? It's not just in experimentation stage anymore. They say now it is at a level you should always consider using AI. And one of the things how they are making sure that you do is that whenever a hiring manager wants to raise a vacancy, that there's an evaluation if that person needs to be hired, or if AI can actually do the task. So you need to make that case that AI cannot do that job before you hire somebody. It will also be included in performance reviews, and their performance review is not only a manager to employee, but also includes peers. So people are going to talk about, is somebody successfully using AI, and that makes it immediately independent on how your career advancement is on how capable you are using an AI. And the other thing that I thought was very interesting was that they also have an expectation that productivity will go up 10 to potentially 100 times because of AI. So that's quite a statement for such a large tech company CEO to say that they really expect that productivity can be much higher because of the use of AI. To sum it all up, they say effective AI utilization is now a fundamental expectation for all employees. So I think that's one to think about, maybe over, like, what do you want to do within your company? Is this something that you want to adopt, and how do you make sure that people in your business are responsibly using AI and actually seeking that productivity increase that a lot of people see potentially is possible. So I think that shift is worthy of being aware of and having that conversation within your own organization. Next up topic, again, AI. There's a lot of news, a lot of different ways of looking at it. This one I am very interested in. When we talk to a lot of our clients, we see that most companies are on some kind of skills-based hiring or skills-based work journey. And if you ask me, I don't think there's any company in the world that has completely nailed it down and is executing perfectly. And one of the areas that most companies run into is that it's really hard to objectively evaluate certain skills. Most of the time that is through assessments or self-reporting, and then it's quite hard to judge on if somebody's actually good at it or not good at it. Now, Microsoft has launched a new product called Microsoft People Skills. And People Skills is the new tool that uses AI and Copilot to go through your everyday work in your email or how you use Copilot to distill what kind of skills might you have based on that. Are you a good Python user because you know how to use Python, or you use Copilot to edit your Python skills and they see, hey, you can do it. And the cool thing about it is that it then flags that as a person in that company. You can then say, yeah, add that to my profile. And then you have profile cards that if somebody has an email with you, you can go over the profile card and you can see which skills Microsoft People Skills has brought up as potentially interesting to use with. Now, it doesn't stop there. You as a company can then also look into how many skills do I have in my organization for this? Or I need somebody with Power BI skills. Can you service a couple of people for me that I wasn't aware of that have this skill? So I truly think this is a monumentous new invention that can really help large organizations to make a better match to the skills that they have in their organization available, but might not be aware of, but also to understand where are the skills gaps and how can we address them. What it can also do is that it serves these skills and also suggests learning to make sure on how you can further skill that, or how the skills are connected to that you can then learn. So there's lots of opportunity here for any company to bridge a gap that I think a lot of companies feel, but there was no easy way to change that. And this it gives a glimpse on what that could look like in the future, and how you can make sure that the company runs more efficiently in the future. Then the last one thing that I personally experienced myself, and that is that there are a lot of candidates adopting AI and much faster rate than companies are doing that. 68% of the workers now use AIs to write their resumes. I think that's when I shared that with my wife, that stat, she was asking, what are the other 32% doing? Why is not everybody doing that? But of course, that's not completely a surprise. What I wanted to talk about today is what are the potential implications of candidates using AI, because that has an impact on the companies. And when I talk to any company, I often hear on how they're working on introducing AI in their recruitment process, but I rarely hear them talking about this is the impact of candidates using AI is going to have on my recruitment process. And that's why I wanted to flag that with you today, because I think there might be profound impact of candidates using AI. And the obvious one, of course, is the validation. Do people actually have the skills that they have, that they claim they have? And of course, there's no easy answer there on how to solve that. That's maybe a whole webinar on its own. I won't go too deep into that. But the two things that you might not realize immediately that I do predict will happen fairly soon is twofold. One is if AI makes it much easier to apply. Back in the day, you would write your cover letter, you would write your CV, and then you would go to well, I have done this in the past. I will go to my mom to spell check it and get some feedback on it. All of that is now so much easier because you can just upload the job description and your CV and your cover letter and work with AI to make it perfect. So that barrier to apply is going to be much easier. You'll also have tools out there that with just a couple of clicks, you can apply for 100 jobs at the same time. So the influx of candidates for jobs is probably going to increase quite a lot. It's going to be so much easier to apply, so the number of applicants for the job is going to go up. And that can be good, of course, but it can also be bad because how invested are these candidates in those actual jobs? And second, if they all look good on paper, it's going to be much harder to do selection. And of course, there might be a little bit of an arms race because most companies will use some form of AI to match or screen the CVs, but also those matching engines will be having a harder time to figure out who's going to be the right candidate. And especially if you see the stat that I have here on the slide, that 83% of the people admit to exaggerating or fabricating things that are not true with using AI that they put on their cover letters or their CVs. And I think that's going to be a real challenge and might have a potential strain on recruitment teams because their volume of work that's coming their way with the increased amount of applicants. And it's harder to actually figure out who's actually good because they all look good on paper is going to be a challenge. And I foresee that over the next year, creating a bigger strain on recruitment teams and actually increasing. So a couple of takeaways based on this. For you, I think the things that I would recommend to start thinking about, first of all, how self-improve is your recruitment organization. We see a lot of companies struggling with scaling up and down when demand for jobs is going down and then suddenly picks up again. That's a hard thing to navigate as an organization. Second is, do you have the plans in place to handle talent affected by job displacement through AI? That's becoming a reality now. I think it's a good moment to reflect on that to see, are we actually prepared for that and how are we going to handle that? Based on the Shopify memo, I wonder, like, as we as a company, for example, have an AI policy, but that people component, that HR AI policy, that might be the time to formulate that and make sure that you share that with your talent to say what are your expectations to use AI. And last but not least, are you mitigating the adverse impacts of candidates actually using AI? And are you not just focused on improving your own application process with AI, but how do you respond to candidates using AI? Because it's very prevalent. Let's jump into the questions with a couple of minutes to go. Let me see here. What do you think AI implementation and the decrease of labor costs will be able to offset the potential losses of companies by tariffs? So I think that's going to be a timing issue. The biggest problem also with the tariffs is no matter your political thinking, and if the policies are right or not, it's going to be very hard for companies to adjust to the new reality. Think about starting a manufacturing plant somewhere in North America. That's not going to be easy to adjust immediately. That takes years to build up, including all the things that you need around that. I think those losses will come quicker than the gains of AI. I do think there will be gains and hopefully quite a lot of productivity improvements for all of us, because that's good for overall prosperity in the end. But the changes and the timing of those changes, that's where the pain is. Imagine if your job is being displaced. It might not be that easy to reskill and reinvent yourself to do another job, and those timing issues, that's where the pain is. So I think the actual timing of these issues are going to be a problem. Next one, we see AI replacing a lot of white collar jobs, even if low level. We see similar things in blue collar jobs as well in the future. Yeah, the reality is that this is also the case for blue collar jobs. Next week, I am in Marseille speaking at Toyota Logiconomy conference, and most of the topics there are also about automation. If you look at the warehouses, that is an area that changes quickly. And I think the interesting part there, especially for blue collar roles, is that the roles that still exist, their requirements change very quickly. So those jobs are changing, and that means the skills that you're required to do those jobs are changing quite rapidly as well. And I think companies are not necessarily talking enough and not talking enough to their talent about these changes. What does it mean that if you're not next to a conveyor belt anymore, but now you need to have a digital screen and you need to manage a digital process? That's a fundamentally different job that you need different skills for. What about interviewing with AI? Is this cheating or should this be embraced? Live interview is the only way to avoid that. This is a very interesting one. Personally, I am of the opinion that if somebody doesn't use AI in their recruitment process, then I wonder if they are the right candidate. You have these tools available. Why would you not use it? The only thing is you need to stay authentic and you need to show your skills. If you have, if you use it, but you just say what the AI is telling you, then you're not showing your skills anymore and what you actually add to the table. So in that case, it is cheating, I would say. But if you have used it to prep the questions or get the most out of that, then I would say absolutely go for it, because that's the way you can handle it. All right, I think we're at time. I'm going to do the last question very quickly. As AI tools become more mature and widespread, how do you see the shift impacting the structure of the labor market, particularly in terms of job displacement versus job creation? And what does the recent decline in tech hiring signal about the long-term balance between automation and human talent? So I think this is the timing issue. I think we will see unemployment rising because of the mismatch in skills. I do think that if companies are becoming more productive, they have more money to invest. The problem is if the unemployment is actually affecting people quite a lot and therefore reducing the economic growth, that can be an issue. But the reality is, with most of the things in history, is that our productivity has always translated to higher overall welfare and will lead to more jobs. The only thing is, it doesn't happen at the same time, and there are groups of people that will be negatively affected by that and potentially turn into long-term unemployment, and that will be a challenge. All right. Thank you very much for today. I hope you enjoyed it, and I'm looking forward to see you next time in 2 months.